Hey everyone, welcome back to this channel. Today I'm sharing an exciting update on my trading challenge. Over the past 3 months, I've grown my portfolio by 22.82%, taking it from about 21,000 Canadian dollars to now over 26K. But let me tell you, it hasn't been easy. The market has been full of volatility, especially with the recent rally and drop that was triggered by the Trump administration's tariff pause announcement. In this video, I will walk you through my trades, share the lessons I have learned, and explain how risk management is helping me navigate this volatile environment. As always, this video is for educational and entertainment purposes only, even though I use real money. So make sure to do your own due diligence before trading. Let's dive in. Now, the first thing is, let's do a portfolio overview. Here's a quick look at my portfolio as of the 9th of April, 2025. My account balance was sitting at Canadian $26,386.59. I'll put it on the screen so that you see. That is up from 21K just about 3 months ago. I say 3 months because I opened this margin account. If you have been following this channel, you know that I mentioned this. I think I opened it around 19 December last year, but as you probably know, during Christmas, the market is kind of like slow, so I wasn't really actively trading. But then I started actively trading, maybe I would say like 2 weeks into January 2025. And now we are on 10 April, and that's when I'm recording this video. If you look at this return, that is a 22.82% growth over, let's say, 3 months in this case. But the S&P 500 index, which is a broad index that tracks the 500 companies from different sectors across the US stock market that are publicly listed, is down 10.62% during the same period when I last checked, and I'll put it on the screen here as well. This growth has come from mostly trading stocks that I understand, but now I'm pivoting towards some vertical spreads, that is cash secured puts and core verticals, right? But I'm also doing covered calls. And I've explained these strategies in this video. And some of you who are on my mailing list, I share some specific insights and some trades and investment trades that I actually take. Now, I don't like to do naked options because last year in 2024, I lost quite a bit of money because I used to trade naked options. They are good if you are right, but the challenge is that the highly likelihood of losing the money in that case is quite high in my view. So as you can see, I'll put the screenshot here. I've been taking profits consistently and keeping cash for the most part to avoid overnight risks. So let me just highlight my recent trades that I took this week, and also some of them because sometimes I hold options for like 2 weeks or a week. Now, the first one on April 9th, and I'm recording this on the 10th of April, I sold cash secured puts when Apple dropped to my level that I felt comfortable, and I closed the position for a profit during the rally on April 9. That was very interesting decision that I took, and I will explain to you in a second why. 2, Arisia with the ticker name ATZ is a fundamentally strong Canadian retail stock. I closed the profitable trade here as well, 120 Canadian dollars. And the thing is, with most stocks, like I've explained in the Toronto Stock Exchange in the past videos, they usually have a wide spread. So sometimes you can lose money because of the spread, because some market makers, they might be just buying low and selling on the high bid spread. Imagine if the bid is for 30 cents. So that means you can make money by just buying 30 cents low and selling 30 cents up. Now, I also have been using cash secured puts to trade Berkshire Hathaway stock, and it's a stock that is very stable in my view because they have a cash balance the last time that I checked of almost 300 billion and wonderful free cash flows. And of course, it's the stock that is managed by Warren Buffett and his team, and I have great trust for them, even though now, with all respect, Warren Buffett is getting older, but of course, he has a wonderful team that I believe that they would even help him execute, and his track record can speak for itself. And I've also been trading Sofi, which is a fintech stock that I like very much. It's cheap in terms of the dollar value, but it also, in my view, it has a strong balance sheet. Last time I checked, I think they had about almost 2.7 billion in cash and cash equivalents when I did research, and also it's a growing fintech. The takeaway from this is that when I see profit, I take them. I don't like generally holding positions overnight, which can be risky, especially in a volatile market where news can change everything. So the key lesson that I've learned from market volatility. Now, let's talk about these things that are important in this journey. One, I've said this: risk management. With unpredictable announcement like tariff pauses or policy changes, markets can swing widely. So by taking profits regularly and keeping cash on hand, I am avoiding potential losses from sudden swings in the market. On April 9, the market rallied, but the next day the market is down. Actually, the S&P 500, when I checked, it was almost down by 3%. So that means if you had betted up and you got in at the top, you could be 3% down in that case, as an example. But, well, if you have stocks, that's a different story if you are holding for long term, and that's an investment. In this particular account, I'm doing trading. Now, number two, research matters. I only trade stocks with strong fundamentals because weak businesses are too risky in this macroeconomic environment. Some companies, in my view, might face bankruptcy due to economic pressure. So knowing what you are trading is crucial. Three, compounding gains. My strategy revolves around small, consistent gains that compound over time. That's it. For me, I'm not really interested, even though it would be nice to have one home run. But what I've learned is that if you have that mindset, from my experience, you end up taking a lot of risk, excessive risk, with the hope that you are going to make a lot of profits. Today, I got in a trade for Berkshire Hathaway with a cash secured put. And what happened is I took one position for a strike price. I think it was 495. And what happened was that I just got in 20 minutes. I cashed out, I think it was 43 US dollars, right? In 20 minutes or so, right? So if you look at the return, I was risking in that case $126 technically because I collected the premium, right? And then I made $43 in a few minutes. But of course, if you then look at the other hidden risks, is if I take a strike price of $495, it means I should have $49,500 in my account, right? So that's the thing. But it was just for strike price of Friday, that is the 11th of April, and you are seeing this on Monday, so I'm recording this on the 10th of April. So each time I take small amount of profit, I repeat the process to grow my account consistently. So you see that when I do that, it's kind of like helped to kind of like just manage the risk. Now, my market insights from April 9th rally. Let's talk about what happened on April 9th. It's a day when US stocks added 4 trillion in value after tariffs were paused for 90 days by the administration. And I remember I saw our portfolio going up overall by almost like 20% in a day. Imagine, but it has actually dropped. Today it's the 10th. But the thing is, like, if I am holding for the long term, these fluctuations, they are part of the game, provided you are holding fundamentally strong businesses and you understand what you are doing, because sometimes there might be risks and some stocks might just collapse. So while it was tempting in that particular case to hold positions longer because I could have just held, I decided to just take the profits. instead. And boy, I'm glad I did that. The next day, today, the market dropped again, reminding me why risk management is so important in trading. As traders, we need to be prepared for everything, and that means managing risks tightly and staying disciplined. Now, this is different from my long term investing philosophy. While trading is exciting, I also have an investing portfolio where I buy and hold fundamentally strong business for long term. These are companies that I believe, can weather economic storms and grow sustainably over time. So trading in this case helps me to generate short-term income, but investing builds wealth, helps me build wealth over decades. And that's the balance that I aim for. Now, thanks for tuning in into my trading challenge update. If you found this video helpful, like this video, subscribe to the channel for more trading insights, and comment below with your thoughts and questions. I would love to hear from you. And if you are looking for personalized guidance on trading strategies or risk management, check out my website here on www.streetwiseeconomics.com to book a one-on-one paid consultation coaching session. Remember, always trade smart and manage your risks tightly. See you in the next video, and happy trading. Thank you.